Hey guys, it's Simon with toughtrader.com doing the trade review for Tuesday the 17th. And what a day, man. We had and the buyers came out and they were just in force today after Netflix had good numbers. I got to say, there was a gentleman in our room, Daniel, smashed it, trade of the day, bought Asia Open last night, sold it midday today for 125 point NQ trade. And I didn't come anywhere close to that. So my hat's off to him. He just did a fantastic job. And I always like to shout out when my guys do good. A lot of guys did good, but no one topped 125 point NQ trade. And a tip of the hat to him. So let's move on with the day. What I wanted to cover is how the day unfolded. And I want to accomplish three things. The first thing I want to accomplish is how we could have told what type of price action to anticipate, right? Number two, I want to cover what the key levels did. And number three, how the algos could have helped us both outside of key levels and inside of key levels to get trades. And I got to tell you right out of the gate, I didn't trade all that great today. I really didn't. I wish I could have said I did. I didn't trade horribly. I did not get smashed or obliterated to the short side. I didn't sit there and fight it all day. However, I did not read trend day up in ES. And so the first thing you always want to go back and look at what were the signs that you missed it. So before I jump into that, and by the way, for people who are looking at, hey, I called it here and said it was going 1,000,000 points. I'm not that kind of trader. Just so you can align with what I'm doing. I'm a short-term trader. My time frame is the day time frame that both the people I coach and the people in the room pretty much are oriented towards the day time frame between options traders and futures traders and a few stock traders, right, who are primarily trading the index. So my goal is to get good entry, have a well-defined risk, have a clear target, right? And I'm not trying to hit a home run. I'm trying to get my 2 to 5 to 10 points and get the heck out of Dodge. That is my objective for the day, every single day. Also, very, very important, I'm letting the algo, we've developed an algo in the room that is helping me with my decision-making process once I get to a key area. So let's start off with the beginning of the day and see what the clues were. So number one, we start off with the TPO and the volume profile. What you're going to see here is on the prior day, if we'll get to the right day here. Before we get started, I almost completely forgot. Need to cover this, guys. Just a quick legal disclaimer. If you'll take a minute to read it, it's required that I put it up there. This is for educational purposes only, right? Past performance is not indicative of future results. No trader is perfect, right? If you have a trader who says he doesn't lose money, particularly if he's a day trader, run, right? And I'm not soliciting you nor recommending that you buy or sell anything, and particularly when it comes to futures, options, currency trading. My goal is to share my trade plan with you and make you a better trader. So if you'd like to read the whole thing, it's sitting right there, be my guest. So the first thing that I look at when I come in every day that I'm trying to figure out which way the market's going to go is I'm going to ask, where's value area high and value area low? So what I should have spied right out of the gate, this was Monday's value area high right there. You can't be short if you can't trade underneath value area high. I want to be clear. Not that I was short out of the gate. That wasn't a confusion at all, right? But not only do you want to be high, but not only do you not want to be short, but if you can consolidate above value area high for the prior hour, usually for the first hour of the day, usually the result is a push out to the upside, right? Okay, so clue number one was we opened up at value area high. Clue number two, if we come look at the price action today, and these are 2-point range bars, but they give you a pretty good picture of what happened. So this is the open, right? Oh, that is messed up. So I'm gonna have to fix that. I don't know why that looks like that. It should not be there. But this is the open for today. We had a slight dip out of the open, but if you look at where we were for the close on the prior session, was all the way back here. Actually, this chart is horrible. So let's go back. I do not know what's wrong with that chart, but I will get it fixed. Let's go to this chart. This is my chart from TradeStation on my other computer. And what you will see, which we can clearly show quickly here. Why is that not updating? Very weird. Okay, that is not working either because this is not refreshing at all. Let's see if we can do this again. That's not going to work. So we'll go to plan C. No problem here. I can fix almost anything, and I have a way to fix that quickly. So please forgive me. Let's just do this really quick. Here we go. Right click, duplicate chart, and this will solve this problem in a moment. And not only that, but if we do this and we load 5 days, it'll make it much quicker. There we go. And then analysis, clean chart, and we'll make this a 5-minute bar. There we go. So there we go. Problem solved. So number one, we gapped, right? Number two, I'm going through my checklist in the morning. Am I able to close below my first 5-minute bar? So it's been so long since we've had a true trend day up. If I go back and I'm direct with myself, I didn't go through my checklist in the morning, right? I just haven't been worried about trend day up, and I should have had the checklist right in front of me. I didn't. So number one, we established our first 5-minute bar, and we failed to close below. Clue number one. Clue number two, we close above our first 5-minute bar and never really close back into it, right? This was where that bar closed. That's the first 5-minute close. We attempted to close below the actual settle of that first 5-minute bar, but really we never got back below, and you'll see all day long, and really after the first, let's just call it 30 minutes, we never got back below the high of that first 5-minute bar. Those are the two strongest indications I have when I'm looking to try to figure out trend day up or trend day down, where it's going, what threw me. So it doesn't do anyone any good to go and say, hey, I had the perfect read and I knew it all along and I was great. I wish I could have said that. I didn't. The slow grind after we gapped really threw me. And if you look at the PA over the last couple of days, we've had a ton of gap and fill days where we push back down. Yesterday wasn't one of those examples, but if you look at the prior day, the great example where we just simply gapped and we rolled all the way back in. So we weren't driving. The tick wasn't particularly supporting a trend day up, and I just couldn't figure out that we were having trend day up. That being said, I could also figure out that I wasn't going to short. It was the first half hour, and I actually tried a small short right at the top of the hour. That technically would have worked, but I ended up just taking it out. The trade did not work. It worked for 2 or 3 points, but really there was no roll down there, and I was lucky not to get scarred on that particular short, and that was actually right in here, and this bar right there was short right there, and it went nowhere. So number one, I didn't go through my checklist. Number two, it was clearly a gap up. Number three, we failed to fill half gap. We failed to close below the first 5-minute low. We then closed above the first 5-minute high, right? And we did not trade back into prior day's value area. So when I look at all of that, what I should have done, right, is gone, where's my logical target? My logical target, the first zone, which I publish every evening to members in the room, was I had 2707. 2707 was my first level. This was also Globex high. And then I had 2710 to 2712 was the level behind it, right? So 2707 followed by 2710, 2712. So if we look at the chart as it pushed up into this level, we now want to go from this chart over to the numbers bars, because what am I looking for when I get to those levels? How do I figure out whether or not we're going to reject out of this zone? So the first piece of good news is when we came into these levels, I had the levels correct. We rejected multiple times out of that 2707, 2709, and the maximum favorable excursion. That's the amount you could have maximum gained if you had the perfect entry. If you entered 2707, the best you could have done was about a 5-point move down to 2702. So what I always ask in the room is, how would have I known to take that trade? Okay. So again, I'm going back and replaying the day as if I'd done it perfectly. I didn't, because I still was trying to figure out whether we were trend day up or not. And I just did not execute very well today. So if we go back and look at the number bars, right, this is where the algo comes into play. Okay. I'm going to stretch this out. This is telling me a couple things. First of all, the dotted line is VWAP. Okay. The bright red line there, that's 1 standard deviation away from VWAP. The bright green line is 2 standard deviations away from VWAP. My ideal trade location, both for long or short, is to get trade location between these 2 points, right? At or in between, but preferably in between the two, is more ideal. And so that's giving me a minimal target if I can shorten this area to move back to VWAP. And if I've really got the read correctly, past VWAP to whatever the support levels are lower. Okay, so that's step number one. So if we look how we open today, right, not only did we get the gap up, but we're also, there's 830 right there. And you can see at 830, the first thing we do is we open up and we trade into the 24-hour volume point of control, right? We bounce right off that volume point of control, right back up to the first standard deviation. But remember, at this first standard deviation, there's two pieces to it, right? It's what are the pre-designated support resistance areas or key trade locations, plus what the market's telling us. So this is a distinction I want to make. If I'm a scalper, right, the setup, and I listed this on the website tonight as to what order these come in. Okay, so the number one key requirement is that you have trade location. That trade location was at 2707. So if you are trading away from trade location, I want to say that again. This 2707, that is trade location. If you were trading away from trade location, let's say you decide to short, but there is no level there to trade against, right? You are now trading outside of any additional help and you are purely scalping or purely reading the market action, right? Now, in the past couple of weeks, while we've been getting 10 and 15 point counter rotations up and down in ES, that's not been a problem because you've been able to take a trade out of location, have it move 4 or 5 points in your favor, take the trade, then back off, and then let the market proceed back to your trade location. When the market price action changes, and this is normal, this is not abnormal. Volatility has come in because uncertainty has declined, right? People have a more certain outlook of the market. And therefore, there's going to be two net effects of that. First of all, the stretch that we get in the market is going to decline. Instead of getting 40, 50, 60 point stretches, although granted NQ ran 100 points today, but in ES, instead of getting 30, 40, 50 point stretches, what we're going to find is we start to get tired between up 20 and up 30. So for my guys that are swing traders that like to catch swings intraday, you want to go, hey, I'm targeting that up 15, 16, 17, 18, 20, 25 areas. I'm looking for what's a trade location up there, and I'm looking for setups. We're not there yet here. So I want to show you next. In the Algo setup, the Algo has a very specific setup. First of all, you have to be triggered, okay? You'll notice here that there's 3 requirements for the Algo. So I'm going to come all the way over here. This is 8:30, we're open. So first of all, I'm usually burning the first half hour of the day. The stars indicate a high volume bar. It's not necessarily high volume relative to the whole day, but this has higher volume than the preceding 10 bars on average, much higher volume, okay? Number 2, so this is a potential setup. Number 2, I have delta divergence. Why do I have delta divergence? If you look at that bar, we traded above the prior bar all the way up to the high, then closed at the low. But there's one element in this bar that is missing that I must have, and it's the number 2 most important element, which is I must have a sell imbalance. I'm going to spread this out so you can see. I must have a sell imbalance in that bar. Now, I want to point something out for my guys in my room so you understand. This bar right here, we had delta divergences. We were armed for a trade. That down triangle indicates that we had stacked deltas. Okay, we do not have trade location, but now we have, do have the sell imbalances. We have a trigger for a short, and if you took this trade right at the low and you limited, has a 2.5 point risk, right? If you took that trade right here at 26.9950, you had 2 things going for you there. First of all, we were at a round number. Round numbers provide psychological help quite often to traders, right? Number 2, you ended up getting triggered with a sell imbalance right here at 26.9950. Number 3, you got a maximum favorable excursion of 26.9725. Your risk was 2.5 points, and your reward was almost 2.5 points. It was pretty close to a 1-to-1, right? Why is that important? Because had you shorted anywhere else in this process, you had one other sell imbalance right here, but it was prior to 9 a.m. It did give the extension down. So I want to show that. You've been triggered. You're out of location. You're not expecting a huge move, and you're moving into VWAP. You want to scalp this trade. As a matter of fact, at worst case scenario, as soon as it turned around on you on this green bar, you wanted to cover and get out. That is the first place where we had a decent setup without location. Continue going through the day, and you'll notice all the way through here, we are getting your next setup. Okay, so this is again an example of taking a trade out of location and how you should have managed it. We are now above the first 5-minute high, right? We're trending up. It's now 9:30, right? You get a stack delta, right? You get a sell bar with a decent negative delta, negative 1270, right? And a sell imbalance. This trade simply stopped right here. Not only did it stop, but it reversed because, and the reason why you should have reversed on it is it gave you a long location, buy imbalance right at the top, right? And what's your target for this? If you're looking for a long or you're looking for a short, from the short side, you're looking to push into VWAP. But from the long side, you're going, hey, my trade location is at 2707, right? That's the logical way to look at that trade. So then you got to look and go, okay, what's my risk? If I take this bar right here at 2702, I'm going to look to push that trade from 2702 up into 2706 or 2707.50. That's 5 points of reward for 2 points of risk. It's not a bad trade. What's the challenge with taking this trade? You had to know we were a trend up, because if you look at this as a whole, right, when you push this in, right, we've just now covered the outside of the day, but we're really not hustling to the upside. NQ is, but ES isn't. So you really had to trust that we were going to hold this bar and push up. The majority of the time when you get these imbalances on top, you do end up with very good days. You get pushed to the upside. They followed through very, very nicely, right? But you had to trust it was going to be able to push. For me, it's hard. Now, if you'll follow through here, see how we zoomed right up into 2707. So how can I know to take 2707 for a trade? I'm going to show you right here. Okay. So when you're in zone, first of all, now realize we have the help of other traders when we're up here, right? Because this is coming off the TPO point of control. That this was, let's go look real quick. This was, I had that 2707 marked. And the reason I had it marked was, there we go. There was an anomaly in the profile going back to the 19th. Okay. So looking at the anomaly going back to the 19th, now coming back to my number bars. I know that I have help. Excuse me. I know I have help now in this area, this 2707. Why is that not displaying properly? I just had it and now I don't. Hold on one second here. 2707. There we go. 2707. I know that I have an anomaly here, right? So we push up, we push up, we push up. Now, what do I look for specifically in that trade? I am looking for I pushed up. I'm looking to push out of that location. I want some evidence that we can push lower. I get a down bar. I get a big negative delta there, right? I get a sell imbalance right on the bottom of that bar. I get stacked deltas. As a matter of fact, I get 3 stacked deltas in a row. All this is telling me I have a short setting up. Now, this is where you want to start to figure things out and see how you are going to trade it, okay? And I want to show you that in this type of PA, it just didn't roll down quickly enough for us to give us a quote easy trade, right? So if you look, had you entered here, you had 2 choices. You could have either targeted, you could have either simply shorted this and put a stop 1 point behind the high of this bar. So this is 2708. You simply could have come in here and put your stop at 2709 and you survived this trade without issue. Okay. Number 2, once this bar came around, it is normal on ES for the trade to print and then to get a backside test of that trade. So what does that mean? What that means is you'd actually like to see a close below this bar, right? And then a backside test of this 2705. I want to show you right here. Backside test of 2706, right? And then a stop 1 point behind the high of that bar, which is 2709. That gives you a 3-point stop. So when I'm making my decision process, right, I'm either very aggressive in just shorting the close of this bar. B, I'm waiting for a close below the low of this bar and then a backside test of this. Or C, I'm going to pull my profile off of these 2 bars and look where my point of control is, which turned out to be right here. And I'm going to target that 2707 for my entry with a stop against 2709. That's a 2-point stop on that trade, 8 ticks, right? What do you end up getting from there? First of all, time-wise, how long does this take? If you entered from the time this bar printed, which was 10 o'clock, until right? So anyway, this printed at 10 until you got your maximum favorable excursion, right? Which was all the way down at 2701. That was almost 2 hours and 15 minutes. And that tells you a lot about the environment we're in, right? This move right here, and this frustrates a lot of traders when I'm coaching guys up, right? You go, well, wait a minute. I shorted this and you're going to tell me I'm going to wait 2 hours. And that's, I think, an appropriate response. And I'll tell you why I think that's an appropriate response. That is an appropriate response because that move, that 5 points, was taking place in 5 minutes or less in prior weeks, right? So your brain is totally not calibrated to taking that trade right now. And you have to understand what a huge edge the algo is in helping you enter and exit the trade. But importantly, you have to also understand that price action plays a huge role in this. And that most people, after you've been in this trade for an hour, and we are in trend day up, we're above value area high, it will really seem when you're looking at this bar by bar, if you come over and look at this main chart, you're just going to conclude, hey, we're just not rotating down, right? And I'm going to get run over. It took a lot of balls to survive that short. I want to show you a second way where you could have approached that and still had a good trade. You could have come in shorted, right? So let's assume the short at 2706, right? You had 3 points worth of risk. You could have targeted 2704. You wouldn't have quite had a one-to-one, but you would have been able to get out pretty quickly by 1041, quickly being a relative term, right? You kept having negative deltas print from here, and you could have gotten your 2 points. It's still an okay trade, right? It's not great, but if you look, we pushed up one more time, right? And if you look through here, we had our single largest sell imbalance of this whole move up here. That 1026, I pointed it out, was a huge sell imbalance. And that really triggered us down to the downside. And if you'll look, we came back and backside tested that one more time, right? And that's what finally gave the roll to the downside. But I think that was the hardest short of the entire day. It was the best location, right? So realize location gave rotation, right? The algo told you you had a decent setup and an opportunity to get an extension out, and the PA just cut the trade short, and it just didn't work. If you come over and you look later and you say, well, what if I wanted a long, right? Well, what I would have been targeting is a tag into this VWAP, and it just never came till late in the day. You got to understand, on trend day up, on trend day up, what frustrates most day traders is you're not getting the stretches that you usually need. I wanted to get the stretches that I usually have, but then that forces you into an audible to grab trades or setups that don't normally work. And that's why most professional traders will tell you that trend day up is the hardest day going, because it doesn't give you the stretches back down into key locations. Now, did the algo give you locations out of order? Sure did, meaning out of location. It did. If you'll look, when we came down, we were triggered long on this green, a little bit of a stretch. We were near VWAP on trend day up, and then you had this bar right here, positive 1431 delta, imbalance right on top. So this told you had stacked deltas. This told you had a positive, positive or strong delta in the upside, and you can see that immediately ripped. If you took the close, again, I want to stress this to my ES traders. You don't have to chase it in this condition beyond the very top of the bar. Unless we're really stretched down beyond the second standard deviation to the downside away from VWAP, you really don't have to take it right out the gate. You can wait for the backside test. Backside test comes in. You have somewhere between, I would really say you have 3 points of risk on this trade, right? And if you look almost immediately, because now you're in the direction of the trend day up, from 2704, you're able to stretch back into 2707. That's your 3 points. You now got a one-to-one risk reward. And if you held on for the stretch all the way back to 2709, 2710, and look at the time it took to achieve that. Your entry on this trade is 1216, and you get your maximum favorable excursion 45 minutes later. But in this particular case, you're going from 2704 to 27, let's call it 09. You're getting 5 points on the upside. It was much easier than the short ever was, right? Now, what you'd be asking is, well, how do we reset now that I've pushed all the way up here? How do I know that I've got a potential short entry, Simon? And I'll answer that question pretty easily. If you look when we're all the way up on top, we finally push into 27. This is the first time we pushed into 2709, but you notice we rolled so far out of 2709. By the time we got the sell imbalance, you really didn't want it. Here, if I erase all these lines, you'll see this. This is where our next zone is 2709 to 2712, somewhere in this neighborhood. Now watch, when we push into this zone, this is where the algo comes in really handy. You've got the trade triggered right here, but notice you've got a down bar, but with a positive delta and no sell imbalance, right? Makes you come up, positive bar with a buy imbalance on top, pushes, pushes, pushes. Now notice, this is the first sell bar right here with a sell imbalance right at 1437, right? You'll notice that you once again get backside tested and you get the roll to the downside into the close. I only had one person in the room grab this trade, but that was picture perfect. You were 2709 to 27. The zone was 2710 to 2712.50. Excuse me, I've got it wrong here. I'll redraw this. The back of that zone was 2710, 2712.50. We push right in, right? We have your sell imbalance right on top. You have your confirmation of your negative delta below. You have your backside test giving you a little bit less than a 3-point stop. And you finally get the roll back to the downside at the end of the day to 2705. So, long story short, what do you need to succeed? A, you need to have an understanding of where you are on the profile. You have to know whether buyers are in control or sellers are in control, and you have to know your time frame. Number two, be aware of what the rotations. There was very few rotations in the market today and made shorts really, really hard, but it also made longs not all that easy as well, right? Unless you had the long, from the way I look at it, unless you had the long from right in here, if you took the long anywhere in here, that same 2-hour wait you had to wait for the short side to develop is the same 2-hour wait you had to wait for the long side to develop, right? For this final push. I don't know very many day traders who can sit in a trade for 2 hours confidently and go, oh yeah, it's going to go. And especially when we've just been in a 20 or 30 point range and go, my 4-point stop will keep me in this trade. If it's true, that's great. I just don't believe it for the majority of traders through a weight like this, which made this day very, very difficult. We finally get exhaustion above. This creates the exhaustion up here, and we finally reject out of that 2712 and push down to 2706. But they were temporary moves. Now, I want to talk about one last thing before I go, because I'm going to assume that members in the room are going to watch this. Very, very important. The likelihood is that we will now have buyers lower, right? And not as many sellers higher. The shorts have been working really easily. I want to watch to see how well we respond out of key locations lower, right? So I'm going to jump for a second. I'm going to come back over here. So for tomorrow, right? I know, first of all, the market, there's two measures that I want to keep track of. First of all, I want the 50-60 for this day, for the day's range. And that means I know that in order for us to roll down, I've got to get below roughly 2,700. Number one, I got to establish below and hold below 2,700. Number two, I know that if I'm not trading below 2709.50, that I want to extend out and away from here and get exhaustion. Where do I want exhaustion? Between 20 and 30 points up, right? To find exhaustion and possible move back. So at least I have a reasonable target back to value area high. If I fail back into value area high, right, I'd like to see a push up, and I'll rely on the algo to tell me if I have a short available to push to value area low. There's an anomaly sitting right here just below 2,700. I expect 2,700 to 2,696 to provide initial support, and we are not short unless we get underneath that 2698.50 and hold. If we get underneath 2698.50, the logical targets below are the modified half gap, which is roughly at 2689.75. I do expect a responsive buy there. Dalton's gap fill at 2686 3/4, right? And then there's an open gap at 2681 1/4. Kind of sort of trust that. That'd be a huge stretch at that point. So you got to figure they're going to try and hold it. There's a naked volume point of control right underneath at 2680. So again, you got to figure they're going to try and hold it. And finally, between that anomaly and the top of that hole at 78, really that whole thing from 81 to 74, that's probably where you would expect to find responsive buyers for two reasons. Number one, if you look behind that, this is where we kept rejecting out of this area back over here, this 2674. We rejected multiple times before we could make it above, right? And then number two, we were able to, once we got once we got above this area, they really weren't able to get back below 74.50 besides attempting multiple times. And so I would imagine that 74.50 from a bigger picture, that's really key to get underneath in order to have a rotation lower. And right now, if you take 27.10, you subtract 30, which I would assume is our maximum stretch we can probably manage, barring news or anything else. 27.10, let's call it for sake of conversation, puts us at 26.80. And again, I would expect this area in general to provide us with responsive buyers the first time in, if not shallower dips, right? What I'm really looking for or looking to see is if we're going to shift gears to shallower dips and get responsive buying. So anyway, that's the long story short. I know that was long. For me, it's important that I have a very clear idea of where I'm going to risk my capital, because consistent winning at a consistently high rate is really, really important. And anyway, and you can't do that if you don't know where your locations are and what your reversals look like within those locations. So I think we have a pretty good idea now, and we'll be able to come in tomorrow and hopefully we hit some of these key locations tomorrow on the downside, and they'll provide us with responsive buyers back on the upside, and hopefully a little bit more expansion in the rotation. You know, when we came off the lows in February of 2016 or 2015, when we came off the lows, no, it was 16, it was 2 years ago. In February 2016, the pattern was really open up, shallow dip in the first hour or two, and then just drive all day long. That was the pattern that we had really all the way through that year and the following year. I want to see if that resumes. And what I'll be looking for key on the downside is tick divergence, rotations into key areas below, and exhaustions. I'll be looking for the algos to stack up to give me an indication of a push to the upside. But for a little while, at least until I see evidence that shorts are back in play, I will be leaning on the long side more than on the short side, and that just makes sense. So anyways, everyone have a great night. Trade safe, right? Remember, your capital is your most valuable thing. Find a mentor, find a room that fits your trading style, find a pattern that you can identify. You only need one or two of them that you can identify over and over again, right? That you can nail and make a lot of money with. You don't have to trade everything. You don't have to be a trend day up trader. All you need is 2 or 3 points to make a lot of money trading. Most people miss that fact. Remember, from retail side, 75% of all traders, for the most part, fail. Okay, and fewer than 5% succeed, and 75% fail, i.e., they blow up their accounts. Right. So just know what you're doing, know what you're looking for, make sure that you can actually get profitable trades down on paper, and don't try to compete with anyone but yourself. That's all you're competing against, is yourself and the best decisions you can possibly make through the course of the day. I'm going to bed, guys. Have a great night. Thank y'all for listening.